Cryptocurrencies. So you think cryptocurrencies are the future? Well, let's discuss. First, let's look to see if they qualify as a currency. Unfortunately, they do not qualify as a currency, as a currency has 3 criteria to be met in order to be a currency. First, a currency must be a means of exchange. Second, it must be a store of value. And third, it must be a unit of account. Cryptocurrencies are not durable means of exchange and, generally speaking, not a store of value, so therefore they cannot be classified as a currency. Then what exactly are they, you ask? Well, in a literal sense, they're nothing more than a video game token made out of thin air by some random person or company. However, some in the investment world view cryptocurrencies as a virtual currency secured by cryptography. The supposed benefit that cryptos have is that it uses the blockchain technology where multiple people validate the transaction, which cannot be reversed, to validate their currency. In addition, they are considered a digital asset. So, a key question you need to ask yourself is, what intrinsic value do they possess? Well, they have 0 intrinsic value because they don't own any assets, they don't produce any dividends or earnings, and they have no quality of management. Another issue is that they're very volatile. Some have had swings of 30+% of their values in a single day. In addition, they create taxable transactions because the IRS considers any cryptocurrency as a security and not a currency. Therefore, any transaction, buy, sell, or exchange made with a cryptocurrency will result in a gain or loss and will have tax consequences. In essence, the IRS views them no differently than a stock. So let's look at an example. Let's say you bought Bitcoin for $10,000 and sell it for $20,000. Then you have a $10,000 capital gain, which you will pay taxes on. Also know, if you trade your crypto for something, it causes a taxable transaction. For example, let's say you bought Bitcoin for $10,000 and then its value increased to $60,000 and you decided you wanted a Tesla, and Tesla accepted that Bitcoin as a form of payment. So you wanted to use that Bitcoin to buy Tesla. The IRS will look at that transaction as if you sold your Bitcoin first and then bought the Tesla with the $60,000 of proceeds. Therefore, you would owe capital gains taxes of $50,000 on that because it would be the $60,000 of value at the time of trade-in minus the $10,000 that you bought it for. Understand, if you trade cryptocurrency for something, that is a taxable transaction. On top of creating a taxable transaction, they also have transaction fees. The crypto owner will not only pay a transaction fee to buy the coins, but they will also pay a transaction fee to trade the coins. The transaction fees generally run between 0 and 1.6% of the value of the coin. Another issue with cryptocurrencies is that not all cryptos have the same supply, so this will affect the value of each crypto. For instance, Bitcoin has roughly 18 million coins produced, and the total number of coins supposedly to ever be produced is 21 million. However, coins such as Ethereum have an unknown quantity. Dogecoin is about 129 billion, Cardano 45 billion, and etc. They all have varying amounts of supply. So you're still a believer, then what is the upside? Understand they are pure speculation as they are relatively new securities, and when it's pure speculation, the sky's the limit. However, they do have some downsides. They are running into regulations from governments around the world, with China leading the charge. Treasury Secretary Yellen and the head of the Federal Reserve, Jerome Powell, have also said that more regulations are needed. If outlawed by governments around the world, then the speculation diminishes and so does the value. In addition, look for governments around the world to begin to generate their own cryptocurrencies, which will also devalue any non-government cryptocurrencies. So let's recap. Cryptocurrencies are a speculative investment, with governments all around the world printing endless amounts of new money and devaluing their currencies. Some view cryptocurrencies as a way to hedge against the world currencies losing their value. Others prefer it because they are decentralized methods of payments. However, only a very small portion of companies and institutions actually accept a select few cryptos as methods of payments. And as Warren Buffett put it, cryptos are effective ways to transmit money anonymously. But a check is a way of transmitting money too. Are checks worth a whole lot of money just because they can transmit money? Think about that. In addition, as one investment analyst puts it, if one realizes how people gain value from cryptos, then one should see cryptocurrencies as a legalized Ponzi scheme because they have no intrinsic value. In order for one to get any value from it, one has to sell it to someone else for a higher price than one paid for it. Since it is a decentralized method of payment, it is the preferred method of payment for terrorists and hackers. This is definitely a negative towards cryptos, as this lends to more criminal activity. This gives all governments a good reason to outlaw these securities, which, if done, would essentially render all cryptos useless, as it would remove all future speculation. With thousands of cryptos out there, the question is if eventually any can become a universal acceptable form of payment, and then which ones will it be? It should be assumed that it would only be one or at most a few, because in order for companies and institutions to accept them, they would need to be universally accepted, and nearly all of them will not be. Also, remember, companies and institutions are in the business of producing goods and services and not generating gains and losses from price fluctuations of cryptos. However, with all that being said, the speculation around these securities is nowhere over, and thus there will be lots of opportunities to make money. If one is wanting to invest in these, anticipate lots of volatility and only invest in what you can afford to lose. With governments around the world starting to issue new regulations with cryptos, one should be cognizant that this could limit the use and thus the value of these securities in the near future. If one is investing in these assets, then pay attention to what companies and institutions are accepting them as a form of payment, as those specific cryptos that are chosen will have a best chance to survive in the long run and generate the biggest returns.